We are going through some very interesting days right now, with prices moving up and down again and again. During this time, I received a question about IFVGs, which are basically known as inversion fair value gaps or inversion imbalances. So first, let's take a look at the Solana chart on the higher time frames. We have this very clean SR flip location sitting just below the $90 level. As you can see on the chart, price keeps rejecting this area over and over again. But later on, this level finally gets broken extremely fast and very strongly. What happens here is a classic support and resistance flip, where the previous resistance now turns into a support area. And when you combine these concepts with a multi-imbalance locations, you start getting a very strong potential entry location. If you look close to the candles here, you can clearly see that alt high gets broken and creates a masterclass price switch. So if you're a lazy trader, can you build up a setup like this, just 1-to-1 ratio position using only a 2-hour time frame, a single high time frame? Yes, that is definitely possible. It might not give you the huge profits, but this is a solid way to enter a trade for traders who don't want to do extremely deep analysis. But what happens if we drop down to the lower time frames and continue the discussion from there? When you open the lower time frames like the 5-minute or 15-minute charts, you will notice that price is crushing hard into our SR flip location. This clearly shows a strong downtrend forming on the chart. But I want you to focus for a moment on this large fair value gap area, the imbalance right here. The definition and the real job of a fair value gaps and imbalances to push the trends in their current direction. So with this fair value gap and imbalance in place, this trend should normally have continued moving lower and lower. But what actually happens here is something completely different. That fair value gap failed and it eventually turned into an inversion fair value gap. By nature, fair value gaps behave very similar to SR flips in the market. When a fair value gap fails, they can turn into inversion fair value gaps. It works the same way that a resistance can turn into a support. So basically a flip happens. And this is the basic idea behind trading inversion fair value gaps. Now when you look at the setup here, you can see that's a 2-to-1 risk-reward ratio setup. If you compare this to the higher time frame setup we just looked at earlier, that was 1-to-1 ratio. But this time using higher and lower time frames together can often give you a much better probability when you are trading. But the way you trade will always depend on your own availability and how much free time do you have. At the end of the day, how you trade is your choice, and it depends on your lifestyle. Okay friends, this was a good educational video. See you next time and please take care and have a great day. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.